Hey traders, good evening. This is Ron Haight. Hope you guys are doing fantastic. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. The markets were down a little bit today. The Dow ETF, the DIA, the diamonds, lost just about 1%, a little over $2. But if I zoom in here on this daily chart, we're a little below the 5-day. I just want to continue to keep an eye on the red line, which is the 20-day EMA, and the orange is the 50-day SMA, or institutional moving average. They're both sitting there together around 241. So right now, that's what we're going to watch. That would be about a 400-point decline in the Dow, besides what it lost today. We stay above there, it still keeps us in a bullish daily perspective. You know, the bulls do get the edge. If we look at the spiders, the SPY, down $2, 3/4%. Similar situation, the 20-day and the 50-day are coming together around 260. I want to watch that. We get below it, you know where we're going for targets. Otherwise, yeah, it was down a little bit today, but volume wasn't that big overall, so it's not really alarming. I got some questions on stocks like Netflix. And if I zoom in here, if you remember, Netflix, Domino's, Xilinx, and now AMAT, these were all seasonally bullish stocks. And how do we know? Flip the calendar to January, that's when Netflix enters that seasonally bullish window where 70–80+% of the time it has historically moved higher and by a lot. And you saw it just go bonkers, as much as $90+, a little bit of a pullback, and now it's bouncing again. And that $90 surge was in front of earnings. And if you just watched the videos or read the emails, you would have known this was the one stock that typically does extraordinarily well. We look at Domino's. This thing's been shot out of a cannon since the 17th. It closed around 258, ballpark 259. Now we're up to 285, 280 as of today. It's ripping. And then you had Xilinx, which was an earnings move. This entered a seasonally bullish window. Well, earnings reports have seasonal biases too. I mean, we've always been taught that earnings reports are supposed to be crapshoots, right? Fundamentals matter. Well, fundamentals matter, earnings reports matter, ... but only if the big money cares. And what we see here is no surprise. The stock goes from around 90. 2 days later, it's up around 109, maybe as high as 110, almost 111. That's crazy. Earnings bias. And now AMAT's starting to move as well the last couple days. It's starting to pop. It's about 10% from just about 4 trading days ago. So here's what I'm going to do. I'm going to check my schedule. I got to see if I can move something around. If I can get some time later this week, because I keep getting these emails, I'm going to try to hold a webinar. Either we'll do it at night or during the day. I'm getting requests for both times. We'll do it one more time, because no matter what time of year we're in, there are stocks that continue to move. I've recently been saying, hey, the top 10 stocks for 2019, some of those are still out there. But now that we're getting into February, there's even more that start to move as well. Let me see if I can put that together. We'll make it a free event. You guys can come in and see them again. I got one email from somebody who said, I tracked them all from in December, and it's stunning. And that's true. The market has gone up from December, but some of these stocks are just many of these stocks are blowing away the market in terms of percentages right now to the upside, because they have that seasonal bullish window, sort of that wind at your back. Everybody's got to be aware of them. And the same thing goes for the ones that crash. And if stocks have bearish windows, you got to be aware of those too. All right, so keep an eye out for some emails. I'll update everybody tomorrow in the video too. If I can get some time, we'll do it maybe Thursday night or Friday or something, okay? But if I do it, you got to be there. It's incredibly powerful information. All right, here's Caterpillar. Earnings move today, down 9% over $12. In the grand scheme of things, it's not that big of a deal. You can see here how the 200-day acted as resistance on the 3rd of December, on the 18th of January, and then just right before earnings. Now that it's moved down, you watch the low at 115 and then down here around 113. Otherwise, what's really happening right now is we just got ourselves a trading range, and the stock's got to figure out what it wants to do. But isn't it amazing, though, that 200-day moving average in purple, institutional moving average, resistance once, twice, thrice, and then pop. It just couldn't get above it. If a Caterpillar had gotten above it, that would be big news. Now, Apple has earnings tomorrow night. This could go either way. Sometimes Apple has big moves. Sometimes it doesn't. Sometimes it can start brand new trends. We just got to wait and see. We had our gap down. It then took us about, 2-3 weeks to fill it, and here we sit. Truly, either way here, Apple does not have a massive seasonal bias with its upcoming earnings report. Here is AMD. They also report tomorrow night. according to Thinkorswim right after the bell. A pop higher here, there's some big upside targets. If we pop lower, we're going to have to break these lows to get a new trend underway. Facebook has earnings later this week on the 30th. I was reading an article on Zero Hedge, and just more like this company is it's stunning about all the stuff they pull. It's extraordinary, the crap that they're getting away with. But you know what? Doesn't mean the stock can't go higher. It's all about capitalism, I suppose. I like to call it faceplant because that's pretty much what it's been doing since its August high. The stock has gotten above some moving averages ever since it got above the 50-day back on January 8th. It closed at 142.53. We're only up $4. That's not a lot of follow through, and there was no big volume. So it wasn't like a pop goes the weasel situation where you get that big spike in volume and it starts running. So maybe this earnings report gives us some insight. But if I was trading this company with stock, I would still want to consider maybe a leap long put or something, because if this actually comes to fruition where they got to pay the piper at some point, the stock could have considerable downside. So far, yeah, it was at 200. Now it's in the 130s. You know, anything can happen. It could easily go right back up to those highs. I just don't know. I hate trading companies when you just don't know what's going to happen. So that's why I typically prefer caution, you know, versus being aggressive. Now, Amazon and Google. Amazon has earnings Thursday after the market closes. Amazon has not rallied back in a huge way. It has gone from 1350 to 1650. That is 200 points, but it's only like $2 on a $14 to a $16 stock if you look at it that way. I think this earnings report maybe gives us a catalyst, and if it jumps up, you know, you have Apple tomorrow, Amazon Thursday, Google the week after. We could see a revitalization of the uptrend here in tech. There's some big hitters coming up. Here's Google. Again, you can see the earnings report right there. You move your mouse over it, February 4th. This stock has done a lot of nothing. It's gone sideways October, November, and December. And Google does this where it doesn't trade very much for a while and then it goes on a run. So we'll see if earnings can do it. Hopefully it just doesn't gap up, you know, multiple $100s and then the move is over, or it's all priced in. And then here is, let's try NVDA. This stock was down on reportedly a guidance cut. It's down 13%, $22. But you know what? Even with that big move, it's got to break those lows. It's got to break 125, and that's where I'd want to set my price alerts. If we break 125 on NVIDIA, then we go back down to 100. That's pretty much what we're looking at. And on the weekly chart, which is what you're looking at right now, this purple line, that's a weekly moving average. It's a moving average on a weekly chart. So that also ties in with 125. That's why it's a big deal. Then you start talking about a 20%, $25 drop down to that 100 area. So should have a lot of fun this week. And I'll let you guys know about maybe doing a webinar later in the week where we can talk about the next group of stocks set to soar and crash, because man, is it working. Wish you guys a great rest of the day and a great week ahead. I'll see you in the next video tomorrow. Bye-bye.